Good morning, ladies and gentlemen. My name is Stuart McAlpine from Clyde & Co in London. Pleasure to be here and to see so many people here. And staying here after that sobering message from the bank panel. I think the topic of the evolving landscape of Asian maritime finance is an interesting one because we have heard about the challenges that maybe the traditional and typical lenders to the industry are facing as we head into 2016, albeit after a strong year for many of them in 2015. And certainly in my practice in London and also in our practices in Asia, in particular in Hong Kong and China, we are seeing a lot of increased participation by predominantly Chinese financial institutions in this industry. So let's just move on to this introduction slide. I'm going to just give some overview comments, and then I'm going to talk for a few minutes about the leasing market, the opportunities to do leasing transactions, because the Chinese lessors in particular have been pretty active, I think, in the last few years, and that activity hopefully is going to increase. The notion of Asian, mainly Chinese banks being major providers to the shipping industry doesn't, I think, take anybody by surprise. I saw some figures last month which suggest that if you look at money lent to shipping in 2015, the top three slots among the top seven banks, three are Chinese: Bank of China, China Exim, and ICBC, which includes their leasing arm, and that the combined portfolio size, ignore the reference to LCs there, that's not correct, but the combined portfolio size of those top three Chinese banks now exceeds $50 billion at the end of 2015. Another statistic that I understand is that since 2008, something like $70 billion of available liquidity from the traditional providers has gone out of the market. So you can see that a lot of that liquidity has been taken up by China. This is a topic on Asian maritime finance, and we shouldn't forget that Korea Exim is a significant player in that area. So focusing on Greece, the end of 2015 marked the end of the year of maritime cooperation between Greece and China, that having been launched in Beijing in 2015. And many of you here will be aware of the significant number of ship financing transactions that were announced in the course of the last couple of years. Maybe in 2014 alone, I think something like $3 billion worth. Of course, there's been a recent announcement of COSCO, winning the bid to essentially control the port of Piraeus. So I think the relationship between China and Greece is close and potentially getting closer. Many of you here will have your views on that, and I would be interested to hear those views. If you focus on Chinese financial lessors, they entered the market in a significant way, the non-Chinese market, I would say, only in 2013. And they've come a long way in a short period of time. I think everybody would accept that. The question is what types of deals they want to finance. Can they really take up the slack in terms of liquidity that maybe is going to become more of an issue as we go through 2016 and 2017. Their access to liquidity is pretty significant through, in the case of the top 3 or 4 financial lessors, their parent banks. And ICBC Leasing is now the largest maritime leasing company in China, with $7 billion as at Q1 2015. So these entities, the financial lessors, have become quite important and significant participants in this industry of ours. So I want to talk a little bit about lease financing, just to really distinguish it from classic ship mortgage, bank-led financing. We're talking about this involving a lessor, which is typically a leasing company, SPV, leasing a large capital value asset to the lessee, which would, under a loan, be the borrower or the operator, in exchange for the payment of hire or lease payments throughout the term of the lease. And the objective is that the lease payment should cover the entire cost of the asset, plus a return on capital to the lessor. So, in very simple terms and very briefly, this is what we're talking about when we talk about lease financing. There are 5 or so different types of leasing transactions. I think for the purposes of this discussion, we're mainly talking about finance leases, but certainly operating leases where the lessor, where the owner of the asset is taking residual risk. These types of structures are pretty common in our industry, and maybe we'll come back to that a little bit later on. Just to make the distinction between bank financing and lease financing, in a bank financing transaction, borrower retains legal title over the asset, and lender makes the loan, and will receive interest on the loan plus fees, and hopefully repayment of the principal over the term. Lease is different in that the lessor, the lease finance company SPV, will retain legal ownership over the asset during the lease period, and only the possession of the asset passes to the lessee, which would be a traditional ship owner or operator. The lessor's return comes in an amount embedded into the lease payment, and in various fee arrangements as well. So the lessor needs to receive a return in the form of as I've just described, over the course of the lease. In terms of security, nearly everybody here, I think, will be aware of the classic security for bank loans, mortgages, assignments of earnings and insurances, share charges and guarantees. In a lease transaction, the lessee has economic ownership of the asset, but not legal ownership. As I said earlier, it has the use and possession of the asset during the main part of its useful economic life. And so typically that wouldn't involve a ship mortgage, because the lessor owns the asset, except that often you see that the lessor itself is financing itself either through its parent company or through some other third-party financing, and so those institutions would take a ship mortgage. But leave that aside, the security package is quite similar, as you'll see in this next slide. So the lease document itself, the bareboat charter party, which is entered into between the SPV lessor and the lessee and the company that will possess the vessel and use the vessel during the term of the lease, is usually entered into on hell or high water bareboat charter terms. And the financing provisions and the many of the provisions actually in that document will look quite similar to those you would see in a loan agreement, but it's not a loan, it's a lease, and the characteristic is therefore fundamentally different. But as you can see from the second bullet there, the typical security documents are pretty much pretty familiar, covering an assignment of charterer's interest in subcharters, for example, and in and share charges, guarantees, and account charges. So the security package tends to look broadly the same. So I wanted, having done that very quick overview of what a lease is, I wanted to just focus a little bit on the Chinese financial leasing market, just to give you some idea of the size and the scope of it. So in China, there are 3 different types of financial leasing companies. There's the foreign finance leasing company, which is on the left-hand side of the screen there. There are domestic finance leasing companies in the middle, and then the CBRC financial leasing company, China Banking Regulatory Commission financial leasing company, which are the larger ones, which have to be capitalized at 100 million RMBs or more. They're on the right-hand side. And that sort of colourful slide gives you a sense of where the various entities fall. And just going straight to the right-hand side of the screen, you can see that the CBRC Financial Leasing Company list is headed by ICBC Leasing and includes TDB Leasing and Min Sheng Financial Leasing Company Limited. So those are the major leasing companies in China, in particular insofar as the shipping industry are concerned, and insofar as access to Chinese lease capital by foreign companies are concerned. These slides, which are a little bit out of date now and which come from ICBC Leasing, from Mr. C.K. Yang actually, are quite interesting in the sense that it shows a significant number of Chinese finance leasing companies in the market as at the end of December 2014. So this is probably this number is probably out of date. You can see nearly 750 companies in total, and only 3% of those fall into the category of the just to go back for 1 second, the CBRC Financial Leasing Company. So 3% by number, but if you look at that slide, you can see that their total registered capital of just under 40 billion. But the ones we're interested in, the financial leasing company sector, highlighted there in purple, have 32% of that pie chart and 38% of the total leasing assets, which are in the region of $325 billion. Again, as at the end of 2014, these numbers will have increased. So I think that gives you a sense of the participation in this market by the very large Chinese lessors. Just moving to the next slide briefly in terms of opportunities to pursue lease financing. Why would a ship owner look to use a lease structure rather than a loan structure? Well, as we say there can be a variety of reasons for this, including a bank's unwillingness, reluctance to provide ship financing in general, or because of credit issues, creditworthiness issues. In a sense, the leasing company is in the business of arranging this type of financing. So where you have a financially sound operator, then they are more likely to receive bank funding as they present a lesser credit risk. The higher the credit rating will also mean that credit is obtained more cheaply. So I think it's fair to say that the decision as to whether to use a loan or a lease is multifaceted, and we probably don't have the time this morning to go into that in too many details. But there can be restrictions in existing financing documents which maybe make leasing more or less attractive, and there can be also restrictions in constitutional documents which can typically be overcome. But again, the decision as to whether to take this particular course is one which needs careful thought and consideration. So what are the advantages and maybe some disadvantages? Well, lessor retaining title to the asset, potentially as owner of the asset, the lessor's in a better position than a lender would be holding a first priority ship mortgage, because of the risks and issues of potentially enforcing that security. And in theory, it should be easier for the lessor to retake possession in the case of a default, as compared to the position of a secured lender who tries to enforce his security. So there could be some advantages there. It's interesting that there's a new Marshall Islands law to protect lessors, which again, I won't go into now, but if anybody wants to know anything about that, I have a partner in Hong Kong who's admitted to practice in the Marshall Islands. He'd be very happy to provide more information on that. There are, in terms of the disadvantages from a lessee perspective, there are lots of tax issues which need to be addressed, and also the flexibility of the use of the asset. There will be restrictions on use, which actually you see also in a loan, but as between lessor and lessee, there's going to be a negotiation in terms of how the asset is used, how it's maintained, and maybe that leads to some possible disadvantages. On the lessor side, insolvency of the lessee, that's also a disadvantage of the bank lending market, I would suggest. And the issues of legal ownership and liability relating to the asset during the lease period. As a lessor, you're a ship owner, that may attract unwanted potential liability issues which you may feel you can't sufficiently mitigate against through insurance or some other way of, or some other mechanism. Very important, I think, also to focus on regulatory risks and the impact of sanctions. In my practice, I work quite closely, actually, increasingly with our sanctions specialists in London and elsewhere, because I think in terms of financing, whether it's lease financing or loan financing, the issues of dealing with sanctioned companies, sanctioned entities, is significant, and there are regulatory risks which can lead to criminal prosecutions. And that sort of rather sobering picture, I suppose, is maybe not something that any of us want to dwell on, but nonetheless, those issues are there. I think I can finish in a minute or two and maybe get us back on schedule, subject to any questions you might have. Clyde & Co. is well represented around the globe. I'm sorry about the size of those of that slide, but I think that's it. I want to thank you for listening to this and wish you all a great rest of the conference. So thank you very much, and happy to take any questions you might have. Mr. Rakowski.
Yeah. Stuart. Yeah. Have the current financial pressures in China that we all read about in the paper had a negative impact on the availability of some of the capital you're addressing today?
I mean, I think that the answer to that question is probably at this moment no, but I think that may well happen. I moderated a panel in London last month focused on this topic, and the view there was that the Chinese banks, the Chinese lessors that have supported the industry in the last few years are still there. Maybe they're going to be more selective. Maybe they're going to be less aggressive in terms of putting assets on their balance sheets for the sake of it. A number of them have indicated that they want to be significant tonnage providers across the sectors in the industry, Larry. So I think my sense is that they're still showing a readiness to do deals, not just with a domestic focus, but with a non-domestic focus. I think that's quite encouraging. But as the bank panel was contemplating earlier on, we are looking at a very difficult environment in 2016. I think the jury is still out on whether this Chinese slowdown is whether that impact is going to be significant, or whether it's just a rebalancing of the economy. And so, but we're working on a lot of deals at the moment. Our guys in Hong Kong are, and I think that they are still, very, very keen to underwrite deals and take big tickets as well. But that could change, I suppose, in as we go through 2016. Gentleman there in the fourth row, I think.
Thank you. A couple of questions. The first one, do you believe that really the leasing companies in China, for example, would be there to finance Greek ship owners? That's point number one, because most of the activity we've seen so far has been really centered on Asia. The second question is regarding the banks that are still, you mentioned something like $50 billion available for shift or having already been spent by Chinese banks. A lot of it is, of course, connected to new buildings,
Right.
Chinese new buildings.
Right.
So effectively, in my view, these 50 billion have very little impact on the gap that has been left by the exodus of the European and the international banks.
Thank you very much indeed for those questions. And I think that, that it is clearly the case that the availability of liquidity, particularly in the Greek market, from China in the last few years is linked to, I think two things. Number one, the Chinese desire to be the biggest shipbuilders in the world, and Greece is now a very, very big customer of China Shipbuilding Inc., a very big and very important customer. So you can't disconnect the two, and I think that going forward, they will look after their interests. Ultimately, will be to, I think, use the relationships that they've established with the Greek owners. I think many of whom have built ships in China over many, many years. I mean, it's not a recent phenomenon, but the fact of the matter is that they have gone to China in the last 3, 4, 5 years in their droves because the money has been available. So I think you're absolutely right that the two things are linked. And I think then the question is, will China step up to the plate to fill the gap that potentially is going to be left by the European and the American banks? I think it's a big question. I don't have the answer to that question. I wish that I did. What I am seeing though in my own practice is a willingness to for them to invest in projects where there isn't a clear sort of Chinese reason for doing so. Whether that's happening on a sufficient enough scale to merit real attention is another question. So I mean, I think the two questions were linked, and I think they're both they're both very valid. Yes, that 50 billion which has come in is it comes with certain characteristics which are undeniable, and I think you're quite right to point out. Thank you. Thank you very much, everybody. Thanks a lot.